It's a story as old as money itself, the tale of fortunes won and lost. But in the digital age, this drama unfolds on a new invisible frontier, a world of code and cryptography where vast wealth can vanish with a single mistake, a forgotten password, or even a mysterious death. These aren't just cautionary tales, they're modern-day treasure hunts where the treasure is locked away forever, hidden in plain sight. They reveal the high-stakes, irreversible nature of a world where your memory is the only key, and a single slip can mean the difference between immense riches and digital dust. Visuals, rapidly scrolling digital code, volatile crypto charts plunging, shadowy figures at keyboards. Imagine a treasure chest worth hundreds of millions of dollars buried, not on a deserted island, but under a mountain of stinking, rotting garbage. This is the reality for James Howells, a British IT worker who in 2013 accidentally threw away a hard drive containing the private keys to 8,000 bitcoins. At their peak, those coins were worth over $500 million. For nearly a decade, Howells has been locked in a battle with his local city council, desperately trying to get permission to excavate the Newport landfill. His plan involves a team of experts, AI-powered scanning technology, and robotic dogs, all in a quest to find a device no bigger than a smartphone amidst 200,000 tons of refuse. It's a striking image. A man willing to move a mountain of trash, all for a digital ghost that might not even be recoverable. Visuals, sweeping drone shot of a massive landfill, a lone figure staring at it, a dramatic close-up of a discarded mud-caked hard drive. Then there's the psychological torture of knowing exactly where your fortune is, but being unable to touch it. Stefan Thomas, a German-born programmer in San Francisco, experienced this digital nightmare firsthand. He was an early believer in Bitcoin, receiving 7,002 coins for making an animated video explaining how the cryptocurrency worked. He secured them on an encrypted hard drive called an iron key, jotting down the password on a piece of paper that he has since lost. The iron key gives him 10 guesses before it encrypts its contents forever. He has used 8. With just 2 chances left, Thomas is staring at a fortune once valued at nearly $250 million, locked behind a password he can't remember. Each failed attempt is a step closer to losing it all. A digital countdown to financial oblivion that plays out in his mind every single day. Visuals, an anxious man hunched over a laptop, a graphic of a digital vault with a countdown timer displaying 2 guesses remaining. Perhaps the most chilling story is one wrapped in mystery and suspicion. Gerald Cotton was the young, charismatic founder of Quadriga CX, once Canada's largest cryptocurrency exchange. In late 2018, while on his honeymoon in India, the 30-year-old CEO suddenly died from complications of Crohn's disease. The problem? He was reportedly the only person with the passwords to the exchange's cold wallets, where it stored the crypto assets of over 115,000 users, amounting to roughly $190 million. The money vanished with him. The bizarre circumstances of his death, his secret will signed just days before, and the company's complex financial troubles led to rampant speculation. Was it a tragic accident or the perfect exit scam? To this day, investigators and burned investors are left with a ghost, a locked digital empire, and a fortune that disappeared into the ether with its keeper. Visuals, a smiling portrait of Gerald Cotton, newspaper headlines announcing his sudden death, graphics of empty digital wallet icons with question marks. These stories, from the landfill to the locked drive to the lost key of a dead man, are more than just tales of technological woe. They are deeply human dramas about memory, loss, and the fragile, unforgiving nature of the digital gold rush. They serve as a stark reminder that in the world of cryptocurrency, the line between fortune and failure is razor thin and often irreversible. For every story of a crypto millionaire, there's another of a fortune lost to the digital void. A ghost in the machine that haunts those left behind, forever wondering what might have been. Here's a look at the invisible strings that pull the market. Is the stock market truly a level playing field? We often imagine a bustling digital bazaar where anyone can buy a piece of a company. On one side, you have the everyday investor, making careful decisions from their home office. On the other, a sprawling trading floor, buzzing with high-frequency algorithms and billions of dollars changing hands in a blink. The core principle we're all taught is simple: supply and demand. When more people want to buy a stock than sell it, the price goes up, and when more want to sell, it goes down. But what if this fundamental law isn't as straightforward as it seems? What if there are unseen forces tilting the scales, manipulating this delicate balance for their own gain? The truth is, the market's currents are often dictated by players you never see. The first myth to unravel is the idea of crowd wisdom. It's easy to believe that the market moves based on the sentiment of the majority of people, but that's a dangerous oversimplification. The real power lies not with the majority of investors, but with the majority of the money. Imagine a vast school of small fish, all swimming in one direction. Now picture a single colossal whale swimming against them. The whale's sheer mass and power can single-handedly change the direction of the water, and the small fish are simply swept along in its wake. This is precisely what happens in the market. Institutional investors, hedge funds, and investment banks, the whales, control such immense capital that their trades create waves. A look at trading charts often reveals the truth. Those dramatic spikes in volume, the ones that precede major price swings, are rarely caused by a surge of retail activity. They are the footprints of a giant. This influence often crosses the line from simple market dynamics into the realm of outright manipulation. These big players have a toolkit of hidden tactics designed to outsmart and exploit smaller investors. One of the most infamous is spoofing. Picture a cloaked figure at a digital trading desk, placing enormous, eye-popping buy orders for a stock. This creates a false illusion of massive demand, luring other investors to jump in, thinking something big is about to happen. But just as they commit their money, the spoofer cancels their huge orders in a fraction of a second, leaving everyone else holding the bag as the artificial support vanishes. Then there's the classic pump and dump scheme. Manipulators work in concert, using false press releases, social media hype, and coordinated buying to artificially inflate the price of a small, often worthless stock. As the price soars, unsuspecting investors, driven by the fear of missing out, pile in. Once the stock reaches its peak, the manipulators dump all their shares at once, collecting massive profits and causing the price to collapse, leaving retail investors with catastrophic losses. The manipulation isn't just confined to individual stocks or shadowy traders. It extends to the global stage, orchestrated by the world's most powerful entities. Think of them as the global puppet masters. The decisions made inside government buildings and central banks have a more profound impact on supply and demand than any single trading firm. When a central bank announces a change in interest rates, it can instantly make borrowing cheaper or more expensive, sending shockwaves through every sector of the economy. A single headline about a new trade policy, a geopolitical conflict, or an unexpected economic report can create massive, instantaneous shifts in global capital flows. These are not just news events. They are calculated moves that redefine the playing field, creating tidal waves of supply and demand that institutions are positioned to ride long before the average person even reads the news. So is the game hopelessly rigged? Not necessarily. While you can't stop the whales from making waves, you can learn to navigate the currents instead of being swept away by them. Knowledge is your shield. Instead of trying to day trade against supercomputers and billion-dollar funds, the most powerful strategy for a retail investor is a long-term one. It means doing your own thorough research and understanding the fundamental value of what you're buying. It means building a diversified portfolio to protect yourself from the volatility of any single stock or sector. By arming yourself with education and adopting a patient, long-term mindset, you can build wealth steadily and confidently. You are no longer a small fish tossed about by the currents, but a skilled navigator, making your own informed decisions, unswayed by the market's hidden tricks and illusions. The future of finance is unfolding right now, and this is your front row seat.